The Ivari Tutorial Guide for WFG Agents, Part 6. Combine and Save. The Great Approach to... Wait. We're having Wi-Fi problems here. One price. Combine and Save. One price with different solutions. I can show you a funny video where it has this setting, but it's similar. Customers are always looking for ways to save money on everything, and their insurance is no exception. We can help them understand how to pick the right products, combine them, and save on the whole package, using a combination of product solutions to meet their short-term, medium-term, and longer-term needs will allow customers to get more out of their insurance budget. To do this, Ivari offers combined banding and layering discounts on the price of total coverages on one life and one policy. Let's talk about combined banding and layering. Combined banding is a discount that is given when customers combine all of their term coverages in one life in one policy, resulting in a total coverage amount moving to a higher premium band. It's really like buying in bulk approach to insurance. Depending on your customer's age and needs, they can purchase a 10, 20, or 30-year term policy, or a combination of any of all of these. When they combine all of their life coverages in one policy, customers will get a discount for the multiple coverages purchased, and they will pay only one policy fee. Layering is the process of adding one or more term coverages onto a base of universal life insurance. As customers get older, their need for life insurance will most likely decrease. The debts they were covering with one insurance on their younger years, such as their mortgage or post-secondary education for their children, will have changed or decreased as they move through life. Simply put, as customers age, assets typically grow while debts typically decrease. In addition to tailoring the changing needs of your customers and providing the discounts of combined banding, layering offers additional services on the cost of term riders that customers would pay by combining these coverages with Ivari Universal. You know what this needs? It needs a questionnaire and an assessment page. Down the road, it's important for customers to understand that the discounts they are getting with combined banding and layering are dependent on how the policy is set up and administered. Changes made to their policy down the road could result in change to their discount structure. For example, as riders drop off, their coverage may move from down to a different premium band. If this happens, the discounts they received at a higher premium band may no longer be in effect. You can help your customers understand what impact, if any, a change to their policy would have to their policy discounts. Here's a real-life example of how the combine and save approach can work for your customers. John has a family and needs both short and long-term insurance coverage. Here we go. Based on his needs, the advisor recommends $400K of T10, $400K of T20, and $50K of T30. If John buys 3 separate policies, he will pay premiums based on the premium rate band for each policy. Instead, he combines the coverage into one policy, and he would pay premiums based on the premium rate band of the combined face amount of $850,000 and save 14%. And here's a funny graph that shows what that looks like. Here's the T10 when purchased separately and purchased together. Now, I really don't know how they calculate this, but maybe they'll cover it in later chapters. But for now, this is what he would be paying if separate, and this is what he would be paying if purchased together. It's a savings of over $100 per month. This is per month, right? I don't even know. Anyway, that's $1,000 bill. The premiums for a non-smoker male 40 years standard risk annualized premiums. Premiums do not include policy fee, which will be levied separately on every policy. Levied is spelled wrong. In the same example, if John also needs permanent UL coverage, layering can be used to get both additional coverage and extra savings on his premium as shown below. Layering gives additional savings of $82, i.e., 238 from 156 on the term coverages. Term savings on the policy is $336.84 for 23% annually. Oh, this is an annual bill. Oh, goes down. There are total savings of 238 by layering, with each additional savings of $82 over combined banding. Total savings on the policy is 330. Okay, the premiums for a non-smoker male, 40 years, standard risk. Annualized premiums. Premiums do not include policy fee, which will be levied separately on every policy.